Hello, everyone, and welcome to Schwab Coaching. My name is Cameron May. I'm a senior manager here at Schwab, and this is Advanced Charting Techniques. And today we're going to be talking about swing trading stocks using thinkorswim's volume profile tool. It should be a very good discussion. I know that some of you have used volume profile before, but I think the view that we're going to be taking of it today is going to be unique to some who even are veteran users of the tool. So it should be a great discussion. I'm really looking forward to it. Before we can get to that, though, let me first of all say hello to everybody out there who's joining us out on YouTube. Hello there, T-Chat, or is it pronounced chat? I'm not sure, but hello there, Chris B. and Ray and David, Rojo, Paul, everybody else. Thanks for joining us week after week. We really do appreciate your attendance and your contributions in these discussions. If you're here for the very first time, I want to welcome you as well. And if you're watching on the YouTube archive, after the fact, after the show has been wrapped and archived, posted to YouTube, and you're just watching the recording, that's fabulous. Enjoy the presentation, but be aware that you're invited to join us in a live discussion. This is a Friday webcast series. It kicks off promptly at 1 o'clock Eastern time. We'd love to have you here in the live stream. Pardon the voice. I also want to let you know that my very good friend Scott Thompson is going to be hanging out in the chats with us. Scott's going to be addressing any questions that I can't get to just during the flow of the presentation. Scott's been doing this for a long time. I've worked with Scott for a couple of decades now, believe it or not. So thanks for having my back there, Scott. And I would also like to issue an invitation to anyone who'd like to follow me on X. That's another great resource for you to find your favorite presenters in between the live streams. We post a lot of content on there to hopefully assist with that educational progress. So it doesn't cost anything to follow. You can find me there on X at Cameron May CS. But let's get into this discussion of the volume profile tool. And as we do, of course, we need to pause to consider the risks that are associated with investing and trading. These disclosures are important, so bear this information in mind. The information here is for general informational purposes only and should not be considered an individualized recommendation or endorsement of any particular security, chart pattern, or investment strategy. Schwab does not recommend the use of technical analysis as a sole means of investment research, and all investing involves risks, including the loss of principal. Okay, so let's set the agenda for the day. First thing I'd like to do is just take a quick peek at the markets, look to see what's going on with last week's trade, but then we're going to hop into this discussion of using the volume profile tool. So I am going to discuss, I'm sure that there are going to be some that are not familiar with the tool. So I want to talk about how it's generally built, but then we're going to get into its application. I'm going to talk about the sort of traditional application of the volume profile, and then I want to discuss how some other traders take a significantly different approach for planning and placing stock trades and other types of trades. Swing trades is what we're going to be focusing on today. So keep your eye open, see if you learn something new or see this through a sort of a different lens today. But before we wrap things up, I want to make sure that we plan and place an example trade, sort of tie it all up with a bow. So that should be a good discussion. Let's go right to the markets. I want to have a look at what's going on with the S&P 500. It's been a bit of a rough last month, but I want to revisit the technical logic of our discussion last year, where we used a combination of tools to create a trading system known as the Trend Value and Momentum System. And it does incorporate 3 tools. I've actually added those tools as a study set. So I'm going to load up that TVM study set, Trend Value and Momentum. Let's load that study set. Here it is. There's our TVM strategy set. And just as a quick recap, if you didn't catch last week's webcast, we talked about using a combination of a couple of moving averages, the triangular moving averages for the 100 and the 50 period time frame. And then we aligned those with the RSI and the MACD, RSI representing potential value indications in the short term, MACD possible momentum swings in the short term. And so look at where the S&P has positioned itself right now. It's been coming down and down and down. And I think it's natural for traders. Are some of you maybe wondering, is this the beginning of the end for the bull run? Could this be the start of a new bearish phase for markets? It could be. We'll see. But it's kind of interesting where that has taken us relative to the 100 period triangular moving average. Well, there's one little bit of hope for the bulls. Also, we might see that the 50 is still above that 100, so that hasn't even softened yet necessarily. So looking through this lens, as we discussed last week, that might still be seen as bullish. Also interesting is that we have crept just down below the 40 line on the RSI. And when the 50 has been above the 100 and we get down below that 40, that might be signaling that we might be nearing low points. Rather than times to get bearish, maybe it's time to, for some, again, this is only one technical view of things, possibly bullish. So value, maybe one indication there. Now our MACD histogram is the one that's kind of departing from our other indicators. We had bright red transitioning to dark red, a bit of momentum shifting toward the bulls a little bit, not so much today. But taken in balance altogether here, the S&P maybe not looking so bad, at least through that TVM lens. So now let's go look at our trade from last week. It's not been a great week for the bulls. I think we can all acknowledge that. However, for our trade, not so bad. We took this on 50 trading above the 100. RSI below 40, and our MACD rising from bright red to dark red. And so this blue oval, you'll have to squint right there, was our entry date, and we've been rising since then. So not doing too poorly. I think can we notch that as not a bad start? Maybe a tiny lowercase w in the win column for now, unrealized gains in market conditions like this. Not bad. We'll see where it goes from here. We're looking to maybe get out with a profit up here at 1,000, but if it backs off, we're going to take our stops down just below 900. And again, anytime I mention stop, I think it's important to say, even if we have a stop there, it's not a guarantee that we'll sell at exactly whatever level that stop is. So let's now get to our discussion. I need to clean up my chart. Let's close out our existing study set. Click apply, click OK. Let's get a nice clean chart. Let me bring up Apple. Apple's been having an even worse week than the S&P, much worse week than Costco, and it's been continuing to fall. But I think some traders might be looking at this long tail that's been developing as we move deeper into Friday's trading session. Could this be the start of something new? Well, we're going to use this as an example. Maybe we're going to be setting up a trade on this today, but using volume. With our discussion last week, volume was not part of the discussion, and for some traders, they consider volume to be a key element in the planning and placing of a trade. Now, today we're going to be doing what's called a swing trade, which means the trader is looking to get in, wait for the stock to swing up, and then get out at a predetermined target level. If you've ever wondered what a swing trade is, that's sort of an abbreviated discussion that. Thank you, Mr. HRH747. Appreciate that. You have great teaching skills. Thank you. There's a request there for me to do an options trade. I'm not going to be doing an options trade today. However, I certainly do have options discussions throughout the week. So you can go check out my options related webcasts. They're found on the calendar. But in any case, let's add our volume profile tool here and start to bring volume into this discussion. So I want to throw out the question here. How many of you are at least familiar, maybe just on a surface level, with the volume profile tool? Pretty nifty tool, but let's load that up here. I'm going to go to the Edit Studies icon. It's just one of our technical studies. We can type in the name up here. Sometimes it's useful to start typing in a name and it narrows down the list of potential candidates. There are lots of studies with volume in the title. My preference is just sort of zip to the bottom and find the volume profile right down there. So I'm going to add that to our chart. It has quite a detailed construction. I'm not going to go into all of these details. We're going to be manipulating some of those inputs maybe a little bit later in the session. But I just wanted to talk about more generically how it's constructed. But a lot of people saying, yep, I've seen this. Ray and Ted, David, Bob, T-Chad, Sergeant Chuck, Chris B. Art says volume profile is key. Can be for some traders. Yep. Sharif, Life in the Fast Lane, Rojo. Okay, yeah. I think a lot of you have seen this before. However, I think some of you are going to be shocked in the way that I discuss the volume profile and how it might be used in the planning of a trade, because some traders see things through what might be seen as sort of the traditional approach. Others, though, don't agree with the traditional approach. I want to make the case for both sides. Okay, but I'm going to click Apply and click OK. And what we're left here with is this histogram of green bars sticking off to the right of price. And these are volume histograms. So it's a relative sizing of volume for different price levels. And then there are three other lines I want to pay attention to. There's this purple line here, there's a red line right down there, and there's another purple line right here. There's a purple area captured between the two purple lines. So what are these? First of all, the green bars sticking out to the right. Well, for our traders who use volume, sometimes they like to know, regardless of where the price is today, how much volume has there been around that level all year long in the case of a yearly chart, or all week long in the case of a weekly chart, or over the last 20 years, or on a longer term chart. And that's really what this volume profile tool does. It takes the volume for each price level, basically, and just shows how much volume has been traded at that level as a bar off to the right. So as an example here, I really want to point this out. Let me grab my rectangle here, and you might notice there was a bunch of back and forth all through this range from July, August, September, October, November, December. A lot of trading right around here. Well, if there are that many days trading shares up or down, left or right, top to bottom, who cares? It's just a lot of days of trading there. Well, that's probably going to be associated with a lot of volume. And if you carry your eyes over here to the right, what do you know? We're seeing a larger volume profile bar or two or three right at that level. So that's what it's doing. It's just tallying up all the trading volume in this range, basically, and expressing it over here visually. Now, there's another spike back here. There's not as many days right down here as maybe, let me finish that little drawing. There we are. But there was more trading volume overall. So actually, combining the number of days and the volume per day, we saw a big spike right there. As a matter of fact, that was the heaviest volume price level of the entire year. And so this gets a title here. What do we call this red line? What do we call this red line? This is known as the point of control. Simply means this is where the heaviest volume trading was at a specific price level for the time frame of the chart. Now, there are assumptions around the point of control. There are also some assumptions around some other levels. Let me talk about these other levels here. Yep, you got it exactly right, Francisco. That's the POC, the point of control. What about this purple line up above the point of control? That is known as our high value node. And down below, we have the low value node. It's a purple line. And there's this phrase that the term node actually carries right on into some other elements of this indicator. When the volume peaks at a certain price level and drops off at other levels, we refer to those peaks as nodes. So this is a node. That's a high value node. This is another volume node. This is a node, the point of control node. Now, in between those nodes are low volume levels. This is where there just wasn't much volume net for the time frame of the chart that was traded here, and in this case here, or here. These are so we have high volume areas and low volume areas. High volume areas commonly referred to as nodes or volume nodes. Low volume areas are just low volume areas. So what traders commonly do is they may assign a greater weight to those levels where there's been lots of trading volume. The assumption there being that might act as areas of support and resistance. If there was lots of interest in trading the stock throughout the year or throughout the week or throughout the month at a specific level, and we get back down to that level, let's say we're coming down from above, that may act as a support level. If we're rising up from below and we're approaching one of these node levels, maybe that'll act as resistance. George says, Cam, for Apple 170 can go back 3+ years. The volume profile only tallying up time period on the chart only. Yeah, George, if we change the time frame, some traders will adapt, and I'll actually demonstrate this in a minute. When we change the time frame, sometimes a trader will change the nodes, or actually the volume bars, I should say, to match the size of the candles or the ticks on their chart. Okay? I'll show you how to do that in just a minute. We're actually going to be going to a shorter term time frame. I'll show you how that's done. Okay, here's where I'm going to depart. This is where there are a couple of schools of thought here. There is sort of the larger school. I'm going to tell you, I'm going into a less popular category of using the volume profile to plan and place swing trades in the way that I'm going to discuss this for just a moment. So forgive me if somebody sees this as somewhat heretical, but there are some traders who actually don't consider the volume nodes as the most important potential levels of support and resistance. And as a matter of fact, they assign greater weight to those low volume ranges. Okay, yep, I've stepped off into the realm of heretical. Let me explain the logic of this. I'm going to take the indicator off for just a moment. Let me come up here and click Edit Studies. Let's just remove our volume profile for a moment. And I'm actually going to give myself just some plain old white space to deal with. Let me give myself 50 bars in my expansion area, and I'm just going to zoom in on that. So all we're looking at is a blank chart. Here is the logic of some traders' views. Let's say that we have a stock that's been trading between, it's not going to let me do it here. I had a good idea to use a blank spot there. That's okay. We're going to use this blank spot up here. Okay. Let's say that we have a trader that notes that a stock has been trading between $40 support. So ignore all the candles and everything. We're just using the white space for this discussion. Okay. $40 of support up to $50 of resistance. So let's draw those two lines in. We have 50 up here as our resistance, and we have 40 down here as our support. I like to be probably too picky about whether I'm straight lines and they're lining up perfectly or whatever. And let's just say that our trader has noted that the stock's been going from 40 up to 50 and back, just bouncing back and forth. Okay, maybe it's done it a few times, up to 40, or up from 40 up to 50, down to 40, up to 50, and back and forth we travel. Let me ask you this. With 50, how many times have we had potentially days of trading at the 50 level? We've run up to 40, we touch 50, and it'll pull back. We get one event here, two there, three there. 1, 2, 3. Do you see that? Down at 40, we've had some trading at 40 once, twice, and 3 times. So trading at those two levels 3 times. So probably, assuming sort of proportionate distribution of volume across those time frames, we're going to see relatively equal amounts of trading at those levels. Not always. It's a big assumption, but follow me here. Now let's focus on the middle of our trading range. How many events have we seen in the middle? 1, as we're crossing up from 40 up to 50. 1, then coming back down. 2, 3, 4, 5. There are always more events in the middle than at top. I shouldn't say always, always is a strong word. Almost always more trading in the middle of ranges than at either extreme. So it gives more opportunity for volume to build, more opportunity for those volume profile bars to grow further and further. I should go this way, out to the right. Okay. So in other words, if we're using volume profile as support and resistance, the traditional view would say buy here and sell here, buy here and sell here, buy here and sell here, as these are assumed to be areas of support and resistance. Let's go back and look now. I'm going to clean off the whole chart. Let's clear the whole drawing set. And instead of assuming, let me switch my expansion settings from 50. Let's just go back to 10. That's okay. I'm going to add this back in. I'm going to swoop down to the bottom, just a little bit too far. Here's our volume profile. let's look at the low levels on Apple. Does that appear to be maybe a resistance here? Maybe a resistance here? The low level. If we look at the node, was there much support and resistance there? Not much. Okay, let's look at this node. It's falling right in the middle of a trading range as we might have anticipated. On the other hand, if we look at the low points, the low volume, support, resistance, resistance. Now, if I were to just draw a line across here, let's connect this. Out from that low, carry it as straight as I can. Good support there, good resistance here and here. Let's take this one and carry that out. Can you see how that's been historically a price ceiling? What about this one back here? Let's draw one in right there. What do we think? So yeah, that's a little bit of a different view. Now, again, I'm not saying this is the way to view volume profile. I'll say it's a different way to view volume profile. So we are going to be building trades based on a little bit of a non-traditional assumption of that volume profile tool. So I'm going to right click here and just clear things up. But we're still using volume. Now, Chris, you never looked at it like that? Interesting. I would suggest just bring up a whole series of charts. Draw lines back from the top, from the heaviest volume nodes to the lowest volume levels, and see which ones seem historically to have been most effective at identifying areas of support and resistance. Okay? I think it's always good to just sort of challenge what we've known. And you may come to an entirely different conclusion. There's nothing wrong with that either. Trade what you see. If, of course, none of these webcasts are intended to be like a sales pitch for a specific indicator or even a specific approach to a specific indicator. That's even, yeah, okay. AJ, you like that concept? Okay, anyway, you get my point. Now, this is an indicator that could be traded in isolation. Very commonly with technical traders, they like to get multiple pieces of evidence pointing toward a trade. Now, another piece of evidence here might be to recruit the other levels on our indicator here. First of all, those of you who use the volume profile, what in the world are these other lines? We've assigned a name and we know what the point of control is, but what is this high value node and this low value node? Well, these are just 1 sigma or 1 standard deviation lines away from the point of control. That's a bit of heavy lifting, but one way that these might be used by traders is that they may show us what's defined as relatively normal ranges within a specific chart time frame. In other words, most of the trading volume has happened within this range for the year. If we're trading above that range, that may be an unusual level where there hasn't been much trading in the past. So getting above this high value node is sometimes seen as the start of a new bullish trend. Now, that can be used on this time frame. It can be used on shorter term time frames. But as an indication of the strength of a trend, breaking above this high value node is seen as particularly strong by users of this indicator. Now, another trend indication is sometimes used, sometimes recruited in combination with this tool, and that is to use a moving average. So not just an interpretation of the tool itself, but a true combination of different technical indicators. So I'm going to go up to our little flask icon. And how about we use an exponential moving average today? Little bit faster than a simple moving average, for better or for worse. Generally, there doesn't seem to be a strong difference. There isn't typically a strong difference between a simple or an exponential. So preferences can definitely vary here. In short time frames, there tends to be more of a pronounced difference between exponential and simple moving averages, but we'll just use an exponential for this discussion, just as another trend indication. But I'm going to click on the gear icon. Let's go for maybe a little bit longer than just 9 days worth of data. How about we use a 100-day moving average? Let me click OK, click Apply, click OK again. So what we're going to be doing is combining the volume profile's intended ability. We'll see if it's able to do this for a future trade here, but it's being recruited to possibly identify areas of support and resistance, looking for those low volume areas. And we're going to combine that with the fact that we're above our high value node, but also near our 100 period moving average. Now, if you've never used the volume profile before, a trader might already recognize, well, if our moving average is trending up and price is near that, there might already be a suspicion that we're possibly near an area of support in a bullish trend anyway. It's just that now volume seems to be confirming that. That was missing from just an observation of price and trend. Oh, and by the way, let me hit the pause button on our discussion there. We're starting to build toward our trade plan. But I do see that there is a survey in the chat window. So this doesn't happen every single time. If you would do me this favor, those that are in the live stream audience here, go ahead and click on that survey link if you would. It'll activate that survey, have it ready for you so that you can fill it out after the webcast is over. You can give me some honest feedback. But our surveys do a lot of good for our presenters. That information, when you click the two multiple choice questions and you fill in the comments box and the suggestion box, that information goes right to the presenters. It's provided directly to the presenters. And I read through that stuff. It definitely helps me in the planning of my webcasts and making little tweaks here and there. So thank you for doing that. I just want to let you know, if you take the time to fill out those surveys, I'll take the time to read through that data. All right, so back to our discussion here. So we have an indication of support combined with an indication of trend and also a secondary indication of support. It's sort of overlapping. Yeah, there are some redundancies in this approach, but it's really just an attempt to mount additional evidence rather than leaning on one indication of support, maybe a moving average bounce. We now have two indications: a moving average bounce confirmed by an area of low volume. I know that sounds a little bit weird, but that's the way that this approach to trading this tool might be used. Instead of just using a move outside of our high value node as an indication of trend, we also have our moving average upward sloping. These are intended to be complementary technical indications of strength. All right, so we now have made a pretty good couple of strides toward planning our trade. At this point, our technical trader using this approach, probably feeling pretty good that this seems to be about the place to be entering a trade. It's not a guarantee of performance, of course, but you can see a similar set of behaviors right back here. There's a low volume area when our price was right near a moving average while it was upward sloping. So that's really what the trader is looking for here, right there. See how that low volume area coincides with upward sloping moving average price near that level. For some traders, that may actually be adequate. You know what? Good enough. They might even look at today's candle and say, we're getting a little bit of a red hammer there, but hammer nonetheless, close enough, and they may go ahead with the trade. But for others, and this is to go back to a question there, what about an NGA says, will this be saved on our Trader Talks channel? Yes, this one is scheduled to be archived, posted to our playlist for the Trader Talks channel. Yep. So you'll look for the Advanced Charting Techniques playlist. Now, for some traders, this 1 year daily view is adequate. However, for others, they may seek to refine the timing of their entry to look to see is trend, is price activity, and is volume on an intraday chart confirming what I think is happening, what my eyes tell me is happening here on a daily chart. So we're going to switch things up and refine our entry. Refine is an effort. It's not a guarantee. But we're going to switch this to, let's say, an intraday 5-minute chart. So this is not for the purpose of doing, really quick in and out trades. This is just if we have an entry on a daily chart, could we maybe possibly squeeze a little bit more juice out of that, get in a little bit, hopefully better price intraday, even if our plan is to hold that trade for several days or a couple weeks? That's the idea here. AJ says, do you think this will work on shorter time frames? AJ, this approach is commonly used by traders on a whole range of time frames. So yeah, the tool can be adapted to different time frames. But regardless of time frame, of course, there's no guarantee of performance on a specific trade, right? Now, when we shift the time frame, though, our indicator is going to be looking back over the full time from the chart. And let's just say I want to look at the day. So I'm going to customize our indicator. I'm going to come up here to our Edit Studies icon. Here's our volume profile tool. And I'm going to click the little gear. And it always defaults to automatic. And the time per profile is for the whole chart. I'm going to switch this automatic and change it to tick size. And what that allows me to do is it allows me to edit the time per profile, the length of those bars. And I'm going to change that to just today. So I'm going to change that to day, click OK, click Apply, and what you'll see now is we're getting these 5-minute bars. You see that? There are quite a few more of them because you get quite a few 5-minute increments in one day's worth of trading. But the rest of this, the interpretation of it is really very much the same. We see the POC, the point of control, that's our red line right here. We see the high value node, and you can see price looks like it might be just about to go above that. That's interesting because it was nowhere near that when I was planning this webcast, which was right back here. It was actually back here. Yeah. Here's our low value node. And let's talk about how a trader might use this information at this point. So we already have in the back of our minds, we have our upward sloping moving average. So it looks like that was looking good. We were trading right close to that moving average, trading above our high value node on the 1-year chart. We were at or around that low volume range. Well, on an intraday level, what our trader might be doing is just looking to see, can we get above that high value node? That's an indication that maybe the trend, even on an intraday basis, has really been strengthening. Look what the trend has been doing today. I think a lot of us have been paying attention. It's been a rough day, right? Had a couple of economic news announcements that kind of set things back. Stronger indications. I think the number on expectations for inflation went from 2.8 to 3.3% for the year. And the jobs numbers came in stronger than anticipated. So, obviously there might be some concern there. Jobs are already getting stronger. Maybe the Fed can't cut rates. So that just might spur more job creation, maybe lean toward more inflation, but also inflation is already stronger. So now the Fed is kind of getting pushed into a corner a little bit, possibly. It might mean fewer cuts in the year. Time will tell, right? All that we know is that initially, it seems that the markets didn't like the news, and a trader they might see something happening on a 1-year chart that seems to be adding up to, I should be buying today. But if prices are just falling like a rock, maybe we wait for those to start to strengthen on an intraday basis. Look at this. We are really close. We might get this while I'm talking. Getting right up. Christian says, good news is bad news? I know, as weird as that sounds, Christian. Oh, yeah, what we just heard today is, hey, look at that. Look at this. We just got above that high volume node. In any case, for some traders might say, there it is. There's my evidence. Time to get into this trade. It's confirming what I thought I was seeing on the 1-year chart. Is that all of that stuff a guarantee that this trade is going to work? No, but we're going to find out because we're going to place a trade. I'm just going to say that we are above that volume node. So I'm going to go ahead with a trade, but we need to plan for when to get out. Now, of course, we can plan for when to get out and take profits, but the trader should probably also have an idea for when they decide that this trade just isn't working out. Well, if the idea here was the trend intraday was confirming the suspicion of the longer term chart, and that was the moment of entry. If that trend then immediately softens, if we start to go back down again, maybe an initial stop level might be down at that lower value node. And that looks like that's down there at 233.54. If we get down below that, trader might give it a little bit of wiggle room. Let's say 1%, just as an example. So that'd be about $2.30 below 233.5. So let's say we have a plan for a stop down around 230. I'm just going to round it off to 231. If you can forgive me for a little bit of rounding, it makes it a little bit easier for me to remember. I'm actually going to jot it down on a notepad that I have here. But let's do it. So just as a recap, let's switch back to our daily chart. I'm going to switch this back to automatic. Let's set this back to chart. Those are just the defaults. Click OK, click apply. And we're going to go back to that 1-year chart. We've already seen what's happening on an intraday basis. But yeah, plan for this trade is to get in now. We're trading at or maybe rising above that high value node on an intraday basis. That you can see how that's really a reflection of strengthening in that in the day's candle. The plan for our stop is going to be down at 231, which coincidentally is also going to be down below our moving average. And where might the trader take a profit? Oh, Christian, which moving average is this? That's the 100 period moving average. As I point over here to the right of that, you can see the 100 right up there. So we know when we might want to take our losses. We're going to place our stop down at 231. Where might the trader take profits? Here they might look up and look to the next higher low level. Now, in this case, that coincides with a pretty prominent peak right here. It doesn't always do that, but we're going to say right up there on the 260 level. Okay, so let's go place our trade. Here's Apple. I'm going to right click, buy custom with an OCO bracket order. That allows us to buy some shares. It's a $237 stock. Let's see. I actually have 4 new webcast series that have started, and they tend to overlap in my brain a little bit. I got to double check something. I want to make sure that we're consistent in the sizing. Okay, so we spent about $5,000 on that last trade. That's right. We're going to leave room to do 20 trades at a time if we need to here. So $5,000, 100 shares would be about $25,000. So how about we do 20 shares of Apple? Let's now bring up our order. We hide this left column, and let's link these orders together and do 20 shares of Apple. I am going to submit a market order on Apple. Obviously, when we submit a market order, there's a risk that we just aren't happy with the price we receive. Right now, we're planning to spend about $237 per share. That's certainly not a guarantee. But our limit order is where we're planning to take our profits, and I believe we said that was up at 260-ish. So we're going to put in 260 here. Our stop we're going to have down there at below that low volume node at 231. And we're going to make both of those good till canceled. There we go. Market order to get in. If we can get up there to 260, fabulous. If the stock decides, forget it, we're heading on down again, we have a stop in place. This is not a guarantee that we're going to sell at exactly 231 though. But let's click confirm and send. Another thing that we can do is if we've estimated how many shares we're going to buy, we can look here to see there's a pretty good estimate as well. The cost of the trade. $4,700. Yep, that's right, in keeping with the position size of our trade from last week. So we're going to buy 20 shares of Apple to market price. With market orders, prices can change quickly in fast market conditions, resulting in execution prices that can be different from the quotes displayed at order entry. Then we're either going to sell, hopefully up there at our profit of 260, or we might sell down at our stop of 231 or in that area. That's what we'd call our activation price. And with stop orders, there's no guarantee that the execution price, the amount actually received, will be equal to or even near the activation price. Now, there's no commission on this trade, but there can be on some types of trades. Let's send that order off and see if we get a quick fill. We should get a quick fill for a market order. There it is. Bought at 237.21. Okay. So about $23 to the upside, about $6 conceptually to the downside. So we'll see how this plan plays out. We'll follow up on this in future weeks. But with that, we've accomplished what I set out to do today. I wanted to talk through this volume profile tool that is so familiar to so many, but I wanted to look at it through that different lens. And so we made a little bit of a non-traditional plan for this trade. We'll see if it works. But using multiple time frames is a technique sometimes used by traders using a whole range of different technical indicators. Today, it was a volume profile. But if it's new to you, I hope you enjoyed it. If it's familiar to you, I hope you learned something new. This is what we do on Fridays. We just get into some charting and we talk through how a trader might use different tools available on Thinkorswim to plan and place trades. And then we place those trades and we follow up on them and see if we can do any good with it. All right, everybody, time for me to let you go. A couple of resources that definitely bear in mind as you prepare for your weekend. Number one is make sure if you haven't subscribed to our YouTube channel, do that now. You can click on the subscribe button right down below my window, right down below my screen. It says subscribe. Doesn't cost anything. It literally only takes a second. And that subscribes you to our Trader Talks Schwab Coaching webcast channel, which is where we post the playlist for our webcast series. So you can find those playlists here. That's where you're going to find the archive or the recording for this discussion. You can also join the live streams here. And if you have an area of interest, like if you want to go back through time and see, what have other presenters said about the risk profile in the past, you could just do a search right there. I happen to know that Ben Watson did a great discussion of this. It's been 5 or 6 months ago. But you can search right there. Now, another thing is make sure that you're following us on X. X is the best place to find your favorite presenters and connect with them in between the live streams. I'm in a live stream for 4 hours a week, so 45 minutes per stream, 5 times a week. That's a little bit less than 4 hours. The rest of the week, if you want to have any chance of connecting with me, it's on X. So you can find me on X at Cameron May CS. I was just on there replying to some posts from my ex. I don't like saying ex friends. It sounds like former friends on the platform. I was just replying to them this morning. So I'd love to see you there. Thank you for filling out that survey. That's definitely appreciated. Also, thank you for clicking the like button. As I'm looking here at the dashboard, I can see 75 likes out of about 200 people watching is a fabulous ratio. When you click that like button, it's like a high five to the presenter for doing a great job. It also gives that presenter, my webcast today, but the webcast gets a boost in the YouTube algorithm and it gets out there to a broader audience. So yeah, click the like button if you enjoy one of our webcasts. That's always appreciated. But everybody, time for me to let you go. Go enjoy your Friday. Enjoy the rest of the webcasts that we have today. I will see you next week. 5 different webcasts on the docket. I'll look for you in those webcasts. I'll also look for you on X. But whenever I see you again, until that moment arrives, I want to wish you the very best of luck. Happy trading. Bye-bye.